So this was a trade that I took last night, and you can see it was a very beautiful entry. So in order to get the best entry when you are trading, you need to make use of multiple time frames. And in this full lesson, I will teach you everything you need to know about top-down analysis. So this is what you will learn in this video. What is top-down analysis? Why look at multiple time frames instead of just one? How to trade using multiple time frames, and I'm also going to show you my own personal high win rate top-down analysis strategy at the end of this video. If you can master top-down analysis, you can get these sniper entries where you have like the tighter stop loss and you can maximize your profits and make the most amount of money out of your trade. Now firstly, what is top-down analysis? A lot of people always ask me, what are the best time frames to trade? The truth is, there is no one single best time frame to trade. It all depends on the context. That is why you need to make use of multiple time frames. And top-down analysis help you do just that. It's basically analyzing the charts from higher time frames and then narrowing down to the smaller time frames. Firstly, we look at the overall big picture of the market. And then we go down to the smaller time frames to look for our entry. That is what top-down analysis is. So the next question you might have is, why look at multiple time frames instead of only one? On the left hand side, we got GU on the 4-hour time frame, and you can see that price has approached this major supply area right here, which means there's gonna be sellers at this area waiting to short the price down and push the price down. Over here, price gave us an evening star candlestick pattern, which tell us that price is about to reverse right now. And how we can enter for this trade is by going down to the 15-minute time frame, which you have on the right side over here. If you go down to the 15-minute time frame, you get a better entry, and you can also see that price is creating a double top right here. So when price is creating a double top, you can expect liquidity to be at this second top generating over here. So that is when we can enter for our short position right here, place our stop loss above this stop right here, and take profit at the next key level or the next demand zone. And we can't trade with only just one time frame. We need to use multiple time frames so that we can analyze our charts and also look for our entry. And if you still don't understand the importance of top-down analysis, let me give you 3 more reasons. The first reason is that you want to gain a clearer picture of the overall trend direction. So in this case, we are on the 15-minute time frame, and you can see price is in a downtrend, right? So you should be looking for sell, right? Wrong, because if you go up to the higher time frame, the 4-hour time frame, or even the daily time frame, you will see that price is actually in an uptrend, right? The overall trend is an uptrend. The higher time frame is showing us a bullish trend direction, which means that price is going up, and we should be only looking for buy opportunities if we want to trade with the trend. And this is why it is so important to make sure that you also look at the higher time frame, because you will never know when you're gonna be wiped out by the overall higher time frame trend if you are only focusing on a smaller time frame like the 15-minute time frame. For example, let's say you're on a 15-minute time frame and you enter for a sell because you saw that price was in a downtrend. And then you will never ever know when this overall uptrend is gonna come inside the market and push the price up, and you're gonna get stopped out for your short trade right here. So make sure you take note of this. The second reason is that you want to get the optimal entry point. As traders, our job is to look for the price where we can get in for the best entry so that we can minimize our loss and maximize our profits. And you can do that by going down to the smaller time frame to look for your entry. Just compare these two entries right here. So on the left hand side, we entered for this trade on the 4-hour time frame, and there was a 48 pips stop loss over here. And then on the right hand side, we entered on a 15-minute time frame, and same thing, we placed our stop loss based on market structure, and in this case, there's only an 11 pips stop loss. And if you compare these two trades, the risk to reward ratio, you can see this trade will have a much more higher risk to reward ratio compared to this trade over here. And the reason is because we had a better entry. And that is why you guys also need to make use of the smaller time frames to look for a better entry point, so they can really have like those tight stop loss like this 10 pip stop loss. The third reason is actually because we want to check our blind spots. So we assume that there is a supply zone area right here, so we entered for a short trade at this supply zone, and we place our stop loss above this supply zone, and we place our take profit all the way at the next demand zone, which could be somewhere right around here, right? If you look at what price is doing right here, this is the major demand zone. But there is one mistake right here, because you actually neglected your blind spot. If you zoom in at this area and you are just trading based on what you see right here, right? obviously the next take profit area is right here. But if you actually like zoom out a little bit, you will actually see that there is another demand zone that is at this area right here. So that is what I mean by blind spot. And you can see price went down to this demand area here first, and then mitigated it and actually went back up. So in reality, your take profit could have easily been right here instead of right here. Now, if you don't check your blind spots by looking towards the left for any unexpected key zones, this is why a lot of time you won't hit your take profit and you won't exit the trade with a good profit. So make sure you check your blind spots. Now let's talk about how to trade using multiple time frames. So for the higher time frames, you're gonna use it to look for the trend direction, right? This is your directional time frame to see the overall trend direction of the market, whether it's bullish or bearish. And then for the lower time frames, you're going to use it to analyze the charts, mark up your charts so that you can determine the best entry points. And then for the micro time frames, the smaller time frames, you're going to use it to look for your entry, confirmation for you to enter for the trade. Now, combining all of these together, you will get your top-down analysis. Top-down analysis is basically where you go down from the higher time frames to the lower time frames and then go down even to the micro time frames to look for your entry. But you first started analyzing the charts on the higher time frames. So the higher time frames are mainly the weekly and the daily time frame, and you're going to use it to identify the trend direction and find any major key levels, and also identify the recent price daily high and low. So over here you can see this is on the weekly time frame, right? We are analyzing the charts and we are looking for the overall trend direction on the higher time frame. So right here you can see price is obviously creating a downtrend. That is why we should be looking for selling opportunities. And at the same time, you can also mark up your major key levels on the weekly time frame. And you can see these two levels are very strong levels that price will definitely respect if price ever encounter that level. And then if you go down to the daily time frame, you can even mark up your prior day high and your prior day low, and price will tend to respect these two levels here. After we got our overall trend direction on the higher time frames, we will go down next to the lower time frames to analyze the charts even further. So the lower time frames are the 4-hour and the 1-hour time frame, and this is where you scan for trading opportunities. And you mark up your charts with supply and demand zones, order blocks, identify the market structure, higher high and higher low in the uptrend, lower high and a lower low in the downtrend, and whether you look for any break of structure. And then you mark up your Fibonacci and also your trend lines, etc. Whatever tools you have in your arsenal to help you mark up the charts, this is where you do it. So once again, we narrowed down to the 4-hour time frame and we marked up our demand zone at this area here because there was a lot of buying pressure at this area. So this is definitely a demand zone where the big banks, the smart money, they are looking to enter for buy in bulk, like buy orders in bulk. And then this is your supply zone area over here. So we can expect price to mitigate this supply zone and go down when price approach this area here. And also we can identify the market structure like what I did over here. You can see this is the lower highs, lower lows, lower highs, lower lows, lower highs, and another lower low. So we can see clear as day price is in a downtrend. In addition to all that, like I said, you want to make sure that you use all the tools in your arsenal to help you mark up your charts so that you can determine where to enter for the trade and where to get out of the trade. So this is when you can also make use of the Fibonacci retracement tool and mark up like the retracement levels so to see where price is going to retrace to and where price is going to go next after it's done retracing. And you can also use your trend lines to see the overall trend direction and look for liquidity at these trendline bounce areas. At this point of time, you have gained an overall perspective of the trend direction on the higher time frames, and you have also analyzed the charts on the lower time frames, mark up your charts, and now you are looking for your optimal entry point. So this is where you go down to the micro time frames, 15-minute and 5-minute time frame. I will advise the 15-minute time frame from intraday traders or even swing traders. And then for the 5-minute time frame, it's mostly for scalpers who are getting in and out of the market fast, like within 30 minutes or within 1 hour. So this is where you look for confirmation for your entry. And this is where you observe, like really observe the Japanese candlesticks to tell us what is price doing. Is liquidity entering the market? Is there confirmation for us to enter for the trade? In this case, we enter for the short position on a 15-minute time frame at a supply zone area that we have right here. And we also entered when we saw some sort of confirmation that price was giving us selling liquidity area right here. You can see this candlestick right here. And it also a trend line bounce, right? Price bounced off this trend line as well. And it was also a Fibonacci 61.8 retracement level. So we got all the confluence for us to enter for this short position and take it all the way down to the next demand zone right here. Now, knowledge is absolutely useless if you do not apply it. So let's apply it together. I'm going to go onto the charts right now and show you my entire high win rate top-down analysis strategy right now. So like I said, the first thing you want to do is to go to the weekly time frame. This is where we are gaining the overall trend direction. Right, the overall trend direction and marking up any major key levels that we have. So I can see there's a major key level right here, there's a major resistance level right here, there's another major key level right here. But the thing about marking these key levels on the weekly time frame is that some of them are irrelevant. We want to focus on what price is doing currently, the key levels around price currently, not the key levels that is from freaking 1 year ago. So we can remove this and just go down to the daily time frame. So if you look at the daily time frame, you can see that price is actually in a uptrend right now, right? Price is creating higher highs, higher lows, higher highs and higher lows, higher highs and higher lows. But at this point of time, there could be a shift in market structure, right? Price could be reversing towards a downtrend right now. And in order to confirm that, we want to go down to the 4-hour time frame to look for our market structure, to observe market structure, remember? So we go down to the 4-hour time frame and we just remove this area because we can actually mark up a supply zone that is at around this area here. Yeah, around this area here, there's a supply zone. So let me change this to supply. And then there's another supply zone at this area right here. Yep. And then there is also a demand zone that is at this area right here, around this area right here, that you can mark up your demand zone. At this point of time, we have marked up our supply and demand zone, but before we do that, we actually want to make sure that we look at the market structure first. So let me just make it clearer for you guys. And as you can see, clear as day, price was in an uptrend, right? Price was creating higher highs, higher lows, and then another higher highs, higher lows, and another higher high right here. But if you observe what price is doing right now, price has approached this major key level that we have drawn on the weekly time frame, right? And also, there is no higher high being created, right? What I mean by that is that there is no higher high that is going to be created right here, right? This high is the same level at this high. So that's the first sign that tells us that liquidity is about to go away and the sellers is about to come inside this market and take over the market. And that is exactly what happened right here. Price actually managed to reverse at this very strong supply zone right here, this weekly key level, and actually reverse to becoming a downtrend and is creating lower highs, lower lows, lower highs and lower lows right now. So at this point of time, we should only be looking for sell opportunities because we have analyzed the market structure and it shows us that price is actually in a downtrend at this point of time. So that is where we can move on to the next step, is to mark up our supply and demand zones, the more recent ones. These are the major key levels that was like a month ago. So you want to mark up the more recent one. And in order to mark up your supply and demand zone, you want to look for areas of inefficiency. So what is inefficiency? It's basically these large candlesticks right here. You can see these large candlesticks where price move very far away from the origin point, and there is a lot of liquidity, a lot of momentum right here. So after you have identified the inefficiency, basically the supply zone or the order block area will be the candle before this inefficiency. So this was the inefficiency and then this is the candle before it. So you want to mark the high of the candle, the highest point to the lowest point, and there you have your supply zone right there. And then after you mark up your supply zone, you also want to mark up your demand zone, and I can see there's a buying inefficiency right here. So I will even go down to like the 1 hour time frame to make my demand zone much more tighter. So over here there's actually a demand zone area right there, and just to make the supply zone nicer, I'll just mark it like right here. You can see this is the high and the low of the candle right here, and over here we have our supply zone, and over here we have our demand zone, right? And right now you can see price approach this major supply zone area that we have right here, And in addition to that, you can also draw out your Fibonacci, like I mentioned, from the point A to point B right here, and you can see that price has also retraced to the 61.8 retracement level. And just nice, the 61.8 retracement level actually lined up with our supply zone order block area right here. This just gave us an additional confidence for us to enter for a sell position right here. But at this point of time, we are still analyzing the charts, marking up the charts, and we haven't looked for our entry yet. So next step is that we want to go down to the 15-minute time frame to look for our entry. So at this point of time, right, there is still a lot of buying momentum, a lot of buying pressure inside the market. So I wouldn't enter for this trade yet. What I want to see is a market shift, a shift of momentum from the buyers to the sellers that is able to push the price down like this. So at this point of time, I am very patient and waiting. So waiting like a lion hunting its prey in the bush, waiting. And at this point of time, this is what I was looking for. A market shift that shift from the buyers to the sellers. So at this point of time, the sellers is starting to take back control of the price. Remember, if price wanted to break past this supply zone, it will create large bullish candlestick like this and just piercing through this supply zone with a lot of momentum and pushing the price up. But instead, what price did was that price stopped. The momentum stopped. The buying momentum stopped. So at this point of time, price has showed us that sellers have entered into this market and the buyers is losing control of the market to the sellers. So this is where I personally entered for the trade. I entered somewhere right around here because it was like a very nice entry and I was pretty confident on this trade. And I placed my stop loss above this supply zone and I placed my take profit all the way down at the next demand zone. But wait, there is a mistake being committed right here. Remember what I said earlier about how you need to use multiple time frames to check your blind spots. So if you actually zoom out and look towards the left, you will notice that there is actually another demand zone that is being formed right here, right? Because there's inefficiency right here once again, and this area here is actually a demand zone. But wait, what if we zoom out even further? If you zoom out even further, you will see that there is actually another demand zone right here, right? You can see there's another demand zone right here where price mitigated this area multiple times. So actually our take profit shouldn't be down here. It should be all the way up here at this recent demand zone. And ladies and gentlemen, this is where the fun begins. Let it happen. You can see price went down immediately and actually hit our take profit right here before it actually started reversing and hit back up. Now, look, observe, look at this large candlestick. The reason why there was a lot of liquidity at this area and I predicted it is because remember, this is a supply zone order block. The smart money are looking to load up their sell orders at this area. That is why price gave us this huge move down and I caught it because I use top-down analysis. Like this video if this video has helped you guys out, and we have just launched our free trading community, trading tribe, where we are committed to helping each other to improve so that we can all achieve financial freedom together and become profitable traders together. So if you want to join that, click the first link in the description. And if you want to learn more about supply and demand, you definitely should check out this strategy right here. And as always, remember, you're just one trade away. Mwah!